Hi there, this is Gerald de Villiers, and I just want to say congratulations for completing module number 2. It is time for module number 3, and in module number 3, we will be going through choosing the correct broker, and throughout the entire module, we will be discussing security of funds, speed of withdrawal and deposits, transaction cost, spread and broker commissions, execution time, spread, and then lastly, the type of broker that you need to select in order to get started with trading. Let's get started with security. The most important characteristics that anyone should be looking for in a new broker is security. The security which the broker must be able to offer should cover two aspects, namely fund security and security of personal information. It is important to know if the broker is a regulated broker before you open up your trading account. This is because before a regulated broker is granted a license to operate, it must meet the requirements such as having segregated accounts for clients' funds and the company's operational funds. This also goes a step further in protecting the interest of the consumer by ensuring the broker operates in a transparent manner and has sufficient liquidity to meet the contractual obligations. Let's take a look at some of the major regulation bodies that are highly regarded by retail traders. My advice to you is when you open up your trading account, make sure that the broker is regulated. That's very, very important. Now, the first one is the ASIC, AMF, BAFIN, CFTC, FCA, NFA, and then lastly the SFBC. A good broker will always support several payment methods to ensure that you will be able to deposit your funds without any hassles. As a general rule, you shouldn't be encountering any difficulties when making a withdrawal. Now, depending on the broker, the transaction cost can be in the form of spreads or commissions. Therefore, it makes sense to look for a broker that's charging the lowest spread or commission. A good broker under normal market conditions must be able to fill your order with the best price. So when you click on the buy or the sell button on your trading platform, the order must be filled at the price displayed by the price feed or close to it. For example, if the EuroCAD is quoted at 1.59529, you should be able to get your order filled at the price or very close to it. So to give you an example on the actual order, if I'm trading the EuroCAD with one full standard lot, and if I click on the buy by market, then my price should be filled at 1.59529 or even close to that specific price. Let's discuss spreads quickly. Now, there are two types of spreads charged by the forex brokers. They are floating spread and fixed spread. Now, depending on the broker, some brokers only offer floating spread while some only offer fixed spread. Now, each of these two types of spreads have their own plus points. So, for example, with fixed spread, you will know beforehand what your total transaction cost will be, and then with floating spreads, they are generally lower than fixed spreads, but the transaction cost will differ depending on the volatility for that specific currency pair. So the last section is the type of brokers, and this section is really important because you need to know which type of broker to select when you open up your first trading account, and I will explain to you a little bit later on which broker to select when you get started. Now, when it comes to the selection of your forex broker, it is also important to note what type of business model that broker is operating with. Now, an A-book broker is a broker that simply passes your order directly to the liquidity provider. And then with a B-book broker, they do not pass your order to the liquidity providers. Instead, your order is placed in the broker's own liquidity pool. So in short, the broker acts as a market maker, and hence, if you have winning trades, the broker has to pay you, and then on the other hand, if you lose your trade, they will keep your money. Now, because of this setup, it is said that there is a possibility of the broker trading against you, as they will lose money when you win. Now, an ECN broker is a broker that utilizes the electronic communications networks. Now, they provide their clients with direct access to the liquidity pool. Now, with the ECN, prices are consolidated from various market participants and are lower and tighter than what is generally offered by a market maker. Now, the next broker is the STP broker. An STP broker, or straight-through processing broker, is a broker that only routes its clients' orders to the liquidity providers. With an STP broker, all the transactions are computerized and automatically routed. The broker does not intervene at any stage of the trade execution. Now, to summarize everything, The ECN and STP brokers are considered A-book brokers. They earn their revenue by charging their clients a slight widened spread or a commission based on the trading volume, and as such, you do not risk having a conflict of interest with an A-book broker. Therefore, when I select my brokers, I prefer to choose ECN brokers or even STP brokers due to the spread and the lower commissions that they charge, and they are basically an A-book broker. With that said, I want to congratulate you. You've successfully completed module number 3. I'll be looking forward to train you in module number 4.